I am sharing one of the best MACD trading strategies, super simple, can be used in forex, stock and crypto trading, and as a bonus, it has a high win rate. Let's keep this short and dive into it. MACD, or the moving average convergence divergence, is super popular among traders due to the simplicity and flexibility that this indicator offers. It is a trend-following and momentum indicator used to spot new trends, but let me be clear, you should never use it alone. By the end of this video, I'm going to show you how to combine it with other concepts to increase your profitability. Now, let's add this indicator on TradingView. Click on the Indicators tab, type MACD, and click on the first one here. First thing first, let's answer the question on how this indicator works. I will start with the indicator settings and the 3 important MACD parameters, which are, by the way, the default settings for most trading platforms. The fast length represents the exponential moving average of the last 12 bars. The slow length, on the other hand, represents the exponential moving average of the last 26 bars. The signal smoothing parameter represents the exponential moving average of the difference between the fast and slow moving averages. Now, let's get back to the chart. The MACD has 4 components: the MACD line, the signal line, the histogram, and the zero line. The MACD line, here the blue line, is usually the difference between the 12 and 26 period exponential moving averages. The signal line, here the orange line, is the 9-period moving average of the MACD line. The histogram is a graphical representation of the distance between the MACD line and the signal line. If the distance between the 2 lines gets bigger, then the histogram tends to increase. If it gets smaller, then the histogram tends to decrease. Also, note that the histogram is positive when the MACD is higher than the signal line, and negative when it is lower. Last but not least, the zero line, called also the baseline, is the center of the MACD indicator. Now that we understand how it works, let me tell you something. The way most new traders use this indicator is by trading blindly the crossover of the MACD line and the signal line. For example, here we have a cross downward, which seems to be a profitable trade. Here the opposite, a cross upward, a profitable trade too. But look at the next 2 crossovers, not that good. You should never use the MACD alone. On the long term, this strategy is not profitable. Before showing you the advanced strategy, let's see an intermediate one which also have a high win rate. Since the MACD is a trend-following indicator, we are going to make sure we are on the right side of the trend by adding a 200 exponential moving average to our chart. Go to the Indicator tab and type Moving Average Exponential and select the first one. Now, let's go into the settings and change the length to 200. Then go to Style tab and change the color and the thickness of the moving average. I like it green. Let's list our conditions for a buy signal. The lines cross upwards but under the zero line, or if one of the lines has touched the zero line before the cross. Then, we need to make sure that the price is above the 200 EMA. As you can see, this is a successful trade. Now, let's list the conditions for a sell signal. The lines cross downwards but above the zero line, or if one of the lines has touched the zero line before the cross. Then, we need to verify that the price is under the 200 EMA. A quick trick to set your stop loss level is to choose the closest between a recent swing level or the 200 EMA. In this case, it is the closest swing. Then the take profit level is up to you, but for me I prefer 1.5. Please note that this strategy works best in trending markets, but when the trend loses momentum and the price enters a ranging mode, then the strategy is less efficient, as you can see here with multiple false signals. So now let me introduce you to the advanced version of this MACD strategy, where we will add an important concept, which is price action. First, we need to identify important levels on a higher time frame, in this case Tesla on the 4-hour chart. If you want to know how to identify these support and resistance levels, check one of my previous videos where I show you step by step how to do it. Now, as you can see, we have a clear level here where the price bounced back. Now we wait until the price retests the resistance level. Once the level revisited, we drop 2 time frames, in this example from the 4-hour to the 2-hour chart. We need to verify that the price is under the 200 EMA. The lines cross downwards but above the zero line, or if one of the lines has touched the zero line before the cross. We enter the trade by setting our stop loss at the previous swing and a profit target of 1.5. As you can see here, the target was reached. Let's get back to the 4-hour time frame and identify another level where the price reacted. As you can see, the level was breached. Let's wait until the price retests that level. Here you go. Now next step, we drop 2 time frames and we wait for the MACD cross. Remember, the cross should be above the 0 level, or if the cross happens after one of the MACD lines touches the 0 line. As you can see here, this condition is not respected, so we don't enter the trade. Let's get back to the 4-hour time frame and see if this level gets tested again. Confirmed second test. Now we drop 2 time frames. The price is under the 200 EMA. We just have to wait for the MACD cross above the 0 line or after one of the 2 lines touches the 0 line. We enter the trade by setting our stop loss at the previous swing and a profit target of 1.5. And bingo, another profitable trade. That's it guys, hope you enjoyed today's lesson. Please like and subscribe to help the channel and see you in the next lesson.